well, before anything, tomorrow is our 23rd birthday for CNBC TV18. So once again, to all our viewers, thank you so much for all the support and love over the last many years. You're going to be seeing a lot of big faces starting tomorrow through the course of the day. So it's going to be a fun day. In the meantime, we have Mitessh Thakkar and Kush Bohra joining in to tell us how to approach the markets today. It's going to be a tough one considering the SGX Nifty is under pressure. So Mitessh, let me start with you. It's a 100-point gap down that we're looking at. Is this a time to buy the dip, or do you think that because, there are a lot of events like the RBI policy, one should just perhaps wait and watch?
Good morning, Sonia. So last 2-3 days, we've kind of changed our stance from buying or being aggressively long on the indices to taking profits and waiting for that dip to play out. I think the last leg of the rally, which started from 18,100 to about 18,880, is taking a breather. There is signs of hourly indicators turning down, pullback to the moving averages happening. So broadly, I think in the worst case scenario, I'm penciling in 18,450, 500 zone being revisited. That becomes my buying area. That's where key averages are placed. It's also a retracement area. So I think, let this contraction phase play out and be buy on the lower side because the overall trend still looks healthy and on the upside. So it is within that period when you have some kind of a counter trend kind of a movement, and therefore you have to be patient and wait for your levels to arrive before you take a long position.
Good morning, gentlemen. Mitessh and Kush. What about you? How are you set up?
Sure, Prashant. First up, happy birthday in advance, and please do let me know where do I have to come for the party at the cake cutting. Great.
Prashant, you're throwing a party?
I think we're all throwing a big party tomorrow, right? Starting 8 in the morning. So you can join us on television, or we'll get the cake delivered to you.
A 23 kg cake, I hope.
23 kg.
I hope so. I mean, it's a big milestone, right? Go ahead, Kush. You'll definitely be in for the celebrations.
Sure thing. Look, in the short term and the long term, the markets are just fine. However, what I'm concerned about is the medium term picture. Now, if you look at the options data on the indices, the global headwinds and the low wicks, this suggests that the market could remain in the range for a long time. But the FII flows and the positive sectoral churn that we are seeing, IT, metals, everything performing, the undertone will for sure be bullish. However, my concern is, regarding the wicks. Now, historically, whenever VIX hits the 12 zone or thereabouts, it stays in that zone 12 to 18, 12 to 17 zone for about a month or two. But the breakouts are usually very sharp, and they take the VIX to the range of 23 to about 29. And we know the inverse correlation that's there between the VIX and the markets. So my concern is that the VIX is spending a bit of time in the consolidation zone. The breakout could, however, not be such a great thing for the markets. We could see a bit of downside, but that's in the medium term. So you would want to take some profit home. In fact, even take some losses home for stocks that are not performing, and stay on some cash. And that is the medium term view. So on the in the immediate basis, Nifty, Bank Nifty, both seem fine. I would probably buy the dips, closer to 18,500 on the Nifty and 42,800 on the Bank Nifty. But, I wouldn't be deploying too much cash right now in the markets, given how things are set up.
Okay, all right. Got that, Kush. What about individual stocks? What are you going with?
So I have two picks. The first one is HGS, Hinduja Global Services. Now, we've been seeing, quite a bit of traction in the stock for the last couple of days. But what's encouraging is that it's crossed the resistance zone of 1400, and it's comfortably trading above that. We expect this momentum to continue for the first target of 1475 and the second target of 1525. A fresh entry here would warrant a stop loss at 1375. My second pick is Forgings. Again, this stock has also done well, but it's seeing a bit of a breather. But this is more of an entry opportunity. Anyone entering at these levels should have the targets at around 940 and 980 with a stop loss at 880.
And Mitessh, how about you? What would your stock ideas be for the day?
Yeah. So I have a mix of buys and sells for the day. 2 buys to about 2 sells. Sorry, excuse me. A buy on Coal India with a stop at 228 for targets of 240, and State Bank of India is a buy as well. Keep a stop at 609, look for targets of 635. On the sell side, a couple of auto names, Maruti and TVS Motors. Maruti is a sell with a stop at 8850 for targets of 8650. While TVS Motors is a sell with a stop at 1035 for targets of 985.
All right, gentlemen, we'll leave it there for now. Deepan and Kush, Mitessh and Kush, thank you very much for joining us through those trading ideas. Well, there's 6 minutes to go for the pre-open. We'll take a quick break here. We'll come back with the pre-open rates. Baldev Prakash of Jammu and Kashmir Bank, J&K Bank, will be joining us to talk about their business outlook. Stay tuned for that conversation. Of course, market chat, market